Following the deadly terror attack in France, hotel groups and airlines like Air France, KLM and Easyjet weighed on the markets. Earlier I was joined by Warwick Lucas from Galileo Capital. I asked him if this was a temporary or more long-term market reaction to the spate of terror attacks that we're seeing in Europe.
In the short term, terrorist attacks tend to have a relatively muted economic impact, although they're bad for sentiment. But as you point out, a process of ongoing attacks can erode sentiment, and certainly Europe right now is very prone to divisionary tactics. So for example, we've seen the far right in France has been particularly strong. Anti-EU sentiment in continental Europe is amongst its strongest in France. So it does add to a heightened environmental risk.
Could there be a long-term change in sentiment?
Well, certainly if it does push France, for example, into some kind of an EU referendum, I mean that France is the heart of the EU, so that could have quite severe consequences.
Okay, do you agree with me that what's happening in France today overshadowing what is good news out of China on growth, because we've been watching that so closely?
To some degree. I think the market was also looking at the Chinese data from the point of view of, well, a lot of it was drummed up by government, but I think it was a excessively negative view. I think there were some quite good patches in there. For example, retail sales data looked encouraging, industrial production looked encouraging. So it's a relatively decent set of numbers out of China, and it reinforces the strength that we're starting to see coming through in the metals. And
there's always been, well, previously there was this fear of a hard landing in China affecting global growth, affecting us, because China is a huge market for us. Is it now clear that there's just going to be a slow tailoring off, the so-called soft landing?
Well, I think there's very much a case that it's rolling over from an infrastructure type economy to a more consumption driven one, and that's a long drawn out process, as is the leveling off in the demographics that drove China for so long, and I think it's going to be a process of digestion as the market gets used to that.
The rand a little bit weaker, the JSE in the red, is that because of France, but otherwise it seems to have been a very good week. Just sum up this week if you can.
Okay, I think in the main, the rand really in the last couple of weeks has been driven by metals markets, and really we've seen a little bit of profit taking coming through in metals markets, and I think the rand is really just tracking that right now.
Yeah, so not too bad.
Yeah.
We've had some of our own data, mining data out yesterday, and let's look at the retailers. Some of the bigger ones are sometimes seen as the litmus test for our economy. We saw Woolies, that's for a niche market, but Truworths out today. Tell me a bit about Truworths and what these figures are pointing to.
Okay, so with Truworths we saw inflation within the company of 9.5%, which is quite a lot, and that'll have related to the rand over the last year, adding to the import bill. That made it harder for consumers to buy their products, so you saw like-for-like sales only up 7.3%, so a relatively cautious environment there. We've also seen that with the likes of Cash Build. I mean, they still showed some growth in their area, but the growth relative to prior period was definitely down. So we're looking at a Q2 where the consumer definitely has been under the whip.
Okay, and talking about consumers under pressure, one of the things is that we're in an interest rate hiking cycle. But it's been a week where talk of a rate cut, but we didn't see it in England. Talk of other economies stimulating their economies, worried about deflation. We have the opposite problem, inflation. But what are we expecting, given all the recent developments, for the Reserve Bank's decision on our interest rates next week?
Well, I think with the rand having continued to strengthen off its lows over the past, shall we say, 6 months, and with the consumer looking so weak, I would be very surprised to see any kind of a hike, but there's not enough data, I think, to justify a cut yet.
Okay, so flat for now.
I'm looking for holding,
which is a relief for consumers, and talk of a possible petrol price cuts, things like that. So a little bit of relief, maybe take advantage now, I guess.
Yeah, absolutely.
Let's look at England. There was talk of a rate cut there, which didn't happen. What's been the reception to the Bank of England?
Well, I think at this stage perhaps some bemusement, but I think that the pound really took quite a bit of pressure, and that really acted as a very substantial shock absorber. So I think at this stage pulling out the guns of interest rate cuts wasn't necessary. So we'll really see on that front. I mean, the key question is what is going to happen to the English property sector. A lot of developments in London that may or may not have been overgeared. We still got to see what the final news is on that, and then we'll probably see the Bank of England move.
And still fears of a recession. Can you speculate what you think, how this will play out?
Lead indicators for England have been quite weak anyway, regardless of whether or not Brexit was going to happen. So we're looking at the situation that a natural recessionary environment was in place anyway. So at this stage I'll just see the BOE standing pat while developments unfold.
Final question, would you say that Europe has become quite a threat to the global economy, to markets as well?
Well, I mean, in as much as that Europe is 1/4 of the global economy, if they spend a lot of time unraveling and turn inward, that's not great news for the rest of the world, particularly emerging markets, which are quite export orientated.
That was Warwick Lucas. I spoke to him when the JSE was in the red. At home, the local market, in fact, managed to close higher in the last hour, despite some volatility.